Now, I think it's safe to say that both SPYI, the newest S&P 500 high income ETF, and JEPI, the JP Morgan Equity Premium Income ETF, are both two very decent ETFs that offer exposure to the S&P 500, or in JEPI's case, some of the names in the S&P 500 have grown over time as far as price return goes, and also have paid investors a ton of income over the years. But in today's video, I'm going to share with you guys an ETF that you probably have not heard of yet, and it not only also has not decayed at all since inception, just like SPYI and JEPI, but it also offers even a higher distribution rate and has beat them both as far as total return goes. So if you want to dig into this ETF with me, make sure to stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z dividend investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. So the ETF that I'm referring to, the ETF that I'm talking about is TSPY, or the Tap Alpha SPY Growth and Daily Income ETF. This is brought to us by Tap Alpha. This ETF has been trading for a little while and has grown in popularity, but because of what this ETF offers, its performance and everything else, I definitely wanted to cover it for another video. Now, just so we're all on the same page, digging right into TSPY's fact sheet, it says TSPY ETF, a fintech-powered growth and income ETF designed to capture the growth potential of the S&P 500 with an optimized daily covered call 0 DTE strategy. So it says why TSPY. First, benchmark participation, aims to participate in S&P 500 growth via SPY. Number 2, high income potential, selling daily 0 DTE options with the goal of generating high levels of income. Number 3, enhanced return potential, seeks to capture returns that longer dated covered call strategies may sacrifice. And lastly, number 4, reduce volatility, aims to reduce volatility and account for risk with execution. Now, the first thing I notice is because this ETF does utilize a 0 DTE strategy, there's going to be the potential for more flexibility within the fund strategy compared to longer dated covered call strategies. But this also means there could be potentially more total return depending on what happens with the underlying, in this case the SPY, over whatever time frame we're looking at. Now, next, very important, it says the fund's objective. TSPY seeks current income while maintaining prospects for capital appreciation. The fund's secondary investment objective is to seek exposure to the performance of the SPY, subject to a limit on potential investment gains. So this ETF is going to be an income-oriented ETF, although they are trying to see some capital appreciation too. And as far as income generation goes, as of right now, TSPY has a 14.35% distribution rate, which is pretty hefty, especially compared to something like JEPI or, of course, even SPYI. Now, lastly, it says TSPY is designed for growth and income in a dynamic market. In a bear market, it could outperform. In a flat market, it could outperform. In a moderate bull market, it could outperform. The only time that TSPY with this strategy could maybe not outperform is during a very, very sharp bull rally. Now, I did mention that TSPY is also not decayed if we look at the price performance since inception, which is August of 2024. It started trading around $24.50. It's right now around $1 above that, so it hasn't really grown all that much, but again, this ETF has been paying out massive income to investors every single month ever since. And speaking of distributions, we're looking at around 30 cents per share per month as of recent, 30 cents before that, 29, 29, 28. It looks like on average, probably around 29 cents per share per month on average over the past several months. Now, this gives TSPY a 14.21% distribution rate, or around a 13.64% trailing 12-month distribution. And like I mentioned earlier, keep in mind this is higher than most other high-income ETFs that do offer exposure to the SPY. And I know you guys are probably thinking, well, how in the world is this ETF's income going to be taxed? It says right here on the TSPY 19A-1, in connection with the monthly dividend payment of 29.80 cents per share payable February 6 of 2025. This is just one example. Of course, you can go on their website and look through all their 19A-1 filings. It is anticipated that 100% of such dividend will be return of capital. So by this point, I'm pretty confident that a lot of you guys at least like aspects of what TSPY has to offer. The S&P 500 exposure, the 0 DTE strategy, the 14% distribution rate, and of course the fact that TSPY has not decayed since inception. But if we stack up TSPY next to SPYI, next to JEPI, we can see that TSPY has also outperformed all of them on the max time frame as far as total return goes. Now, SPYI is right behind TSPY, so it's pretty much neck and neck, but still comparing all three of these, TSPY has done very, very good. Now, even though I don't have a large position of TSPY in my personal portfolio as of right now, I would definitely consider adding some in the future, especially because I personally do want to have more and more S&P 500 exposure through high income strategies in my long-term portfolio. So I would not be surprised if I see TSPY inside my long-term portfolio sometime in the future. But before I go to the question for you guys down below, do you currently hold on to any TSPY in your portfolio? And if not, what is your all-time favorite high-income ETF that does offer exposure to the S&P 500 across the market as of right now? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.